Guys, what's up everyone? Welcome back to this daily cryptocurrency video. In today's video, we're going to learn how to trade on a bear market. A lot of you have lost a lot of motivation in crypto, don't know what to do, don't know where it's going. The reason why they say 90% of traders fail is not because they lose. It's essentially they start to give up. They see the market's crashing. They don't want to look for news anymore. They don't want to continue. They say it's over. They think they're good traders because the market pumped 1,000%. But when it goes down, that's it. They just essentially give up and they say it's over. I'm just gonna be in it for the long term. But if you are a trader, guys, this can change very easily. And if you lost especially a lot of motivation and you want to learn how to trade, then this video is for you, because a trader is gonna go both ways. It's gonna go essentially, it's gonna long and short. Long on a bear market, long on a bull market, short on a bear market. So let's dive in real quick into the charts. Let's have a pause at this. Let's dive in right now on the 4-hour time frame. So right now, as you guys can see, Bitcoin is currently down 2%, and the whole market is crashing. A lot of you guys don't know what to do. Like, I gave up, I'm in it for the long term, whatever it is. Anyways, let's have a look. If you guys saw my video a few weeks ago, which was even more, approximately a month and a half ago, I mentioned that if we were gonna break this line, we would be bearish essentially. Well, let's have a look on the bull side. Okay, so first of all, we had two peaks right here, two tops, and that was an amazing trend line to essentially long from there. Okay, so we knew that this was a start of a new trend line. Okay, so what could we have done? Well, as you guys can see, we came back and retouched this trend line right here, so we could have taken a long. So essentially on a bull market, okay, you're going to want to look to take longs. On a bear market, you're going to want to look to take shorts, okay? So let's have a look on the bull market just so you guys can have a nice idea of it. So as you guys can see right here, if you took a long from this the trend line, you would have been 20 up 20%. Now, depending if you're using 2x, 3x, which is very reasonable to use 3x, you would have been up 60%, okay? You could, of course, put a stop loss right here, which is a 4%, 5% stop loss, which is very reasonable. Another one right here. We had a nice little beautiful bounce right here. Boom. Okay, boom, you could have taken this all the way up another 17% if you of course use leverage. That could have been more. Now people say, oh, where do we take profit? Well, that's a very good question. As you guys can see right here, it's only 20% if you go at the peak. Well, as you guys can see again right here, we had another resistance right here, two of them. So to take at least 50% profit at that area. So if you're smart, not to be greedy, and that's something that ruins essentially traders, is that they're too greedy and they take profit too late, and essentially it comes back down, and they, instead of taking 20%, they take 10%, which is still fairly good, but still, it's very important not to be greedy. So we had a nice little resistance right here. That's how you know when to take profit, okay? Anyways, that being said, let's remove that real quick. Okay, so this was the trend line. I'm gonna show you guys, okay, the exponential moving average on the daily time frame, because I think they're one of the most important. Okay, so as you guys can see right here, I mentioned in all my videos, okay, that you always want to look for a nice little bounce off the EMA ribbon. That's number 2. Okay, so we saw a nice little bounce right here. That could have been a beautiful long. We saw a nice little bounce right here. Could have been another beautiful long. A nice little bounce right here. You essentially don't want it to go below these ribbons right here. You don't want it to do that. Okay. We saw another little bounce right there. Now I mentioned, okay, that once we would break these ribbons right here on the daily time frame, if we would close, okay, we would essentially be bearish. And this is exactly what happened. We came back down, okay, and then we had a nice little dead cat bounce and came back down again below the EMA exponential moving average, EMA ribbon essentially. So yes, you see that was a beautiful drop right here. We came back exactly at the support, resistance, whatever you guys want to call it, resistance that flipped support, came back up, guys. We came back up, retouched that resistance, which was essentially a dead cat bounce. How do you know it was a dead cat bounce? Well, it was curving towards the downside. It wasn't making a V shape like this. It was in a slight curve. So you knew this was gonna come back down. The bulls were weak. Look at this. The volume right here. The volume right here was weak. So you knew this was gonna come back down essentially. The second we broke that ribbon again right here, we saw this nice little candle. Boom. We just dropped. And we essentially haven't been breaking these ribbons essentially to the upside. So let's have a look on the 4-hour time frame and have a look at these EMA ribbons. So you guys could have essentially taken a short. Here, let's have a look. Here, let's go back to the daily time frame. You guys could have essentially taken a short right here. Let's assume it breaks this. It broke very hard, and let's assume you took it right here, and it's not too late. Okay, you could have taken a short right here, which was to the next support level, which is here. and that would have been another 20% gain. So as you guys can see right here, we're making 20% gains to the upside and 20% gains to the downside. And that's not even the most perfect entry, by the way. That's actually a reasonable entry right here. Like, okay, we see, we're seeing an increase in volume. Okay, let's go. Maybe this is a good time to short. Maybe the beers are for real this time. So, these are things you have to take in consideration. And guys, another thing is that trading is not a prediction. You're not predicting where the market's going to go. You're essentially going to react where the market's going to go. This is a beautiful example right here on the 4-hour time frame. Ever since we broke out of these ribbons right here, the EMA ribbons, we've been supported, as you guys can see on the 4-hour time frame. We've been supported to the upside, as you guys can see right here. But let's zoom in real quick because it's more important. So if we zoom in right here, we had a few rejections that could have been a nice little short actually. So let's have a look. So we had a nice little short right here. Okay, fine. Let's say you want to take half. Okay, fine. You make 5%. But look at this rejection right here. We had a nice little rejection. Could have been a nice short. Boom. Hit the EMA ribbon. Nice rejection. Could have been a nice short. Boom. Again, hit the EMA ribbon. Could have been a nice short. Another one. Here, let me move that pink line real quick. So these are getting rejected essentially. As you guys can see, it doesn't pass. You could put a stop loss right here above these ribbons. Any close above the exponential moving average would be a positive sign for the bulls and a bear sign, a bad sign for the bears. Anyways, right here again, boom, rejection, 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 rejection. Another one. Look at that wick, rejection. We got rejected right here and right here. Now the two best trade that could have been done is probably this one right here. We're towards the downside. We got this one. We got this one, and then we got that one essentially. So we had a few good trades that we could have shorted on the exponential moving average. So you don't always have to long, and of course in this case, guys, you don't want to be looking for longs because you're in a bear trend, not only on the 4-hour time frame but on the daily time frame. So why would you risk longing it? Like, you guys know that the bears are stronger in this side. Like, unless we're breaking above these levels, and there's no reason why we should be longing essentially. Like, in my opinion, yes, on the macro time frame we are at the end of the day bullish. I'm very, very bullish on Bitcoin, but I will be taking a short here and there. I don't like shorting personally myself. And this is why you have to risk whatever you can afford to lose. On my trading account, I will short. On my investing account, there's no way I will be, playing with $20,000 or $25,000 worth of dollars and starting to short. No, maybe $2,000 or $3,000, $4,000, whatever it is. It depends on you guys' capital and how much you guys can afford to lose. But never, ever, ever, very dangerous. Never, never play with whatever you can afford to lose. It's very, very dangerous. Anyways, moving on to the daily time frame, another thing I want to have a look at is the moving averages. Something very, very important, okay, on the downtrend. Okay, the 200 moving average, we've been supported ever since March 2020, so about a year and a half now, even a little bit less, sorry. And we haven't been below the 200 moving average, which is the blue line. Well, as you guys can see right here, if I zoom in, we had a few rejections. We had 1, 2, 3, 4. So you would realize once again that once we would retest that that moving average, you would know too short. But guys, you might say in your head, oh, but what if this time it breaks above? Well, okay, that's a very, very good question. That's exactly when you start putting a stop loss. Let's have a look, maybe right here. Okay, because you wanna be controlling, you wanna have risk management essentially. So you don't want to put a stop loss too tight, or put a stop loss right here too far away where you're down essentially, I don't even know what, 15%. No, you want to put a stop loss nice and right above it, so it's something that's normal. So yeah, so let's say right here, let's say we come back and retest this. Fine, I'm gonna have a little short here, 2x. Come back, maybe we're going to retest this level. That would be a 10% to 8% drop approximately. Let's have a look. Okay, 10% drop, exactly 12%. So as you guys can see, we could have taken a 12% gain right here from this short. And what happens if it goes up and breaks that 200 moving average? Okay, no problem. We got a stop loss right here at 3.6% or 2%, whatever you guys want to put, whatever you guys feel comfortable. And we also have that resistance right here as well that's helping us. So we know that we have a resistance right here with the 200 moving average. So we know that if it breaks that, not only is it going to break the resistance, but it will also break the 200 moving average, which will mean it's bullish, as well as break the exponential moving average on the 4-hour time frame. Let's have a look. You see exactly, it would be right here. It would break it. So we would have a few confirmation essentially, which is pretty good. And then maybe you could look to take a long from here. Just because you're bullish doesn't mean you can go back and being bearish on the short term. What you don't want to do is you don't want to panic, okay? You have to be rational. You don't want to sell here and then buy here. You don't want to buy peaks and then go again. Oh no, I'm gonna sell right here and buy right here. And oh no, 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 I'm gonna sell right here. No, because it's going down fast, that's not what you guys want to do. You guys want to be rational. You guys don't want to play with emotions. You don't want to play with fear. Oh, it's dumping fast, let's short it. No, that's the horrible and not the good way to trade in my opinion. And have to be rational and can be emotional essentially. Another thing I want to have a look at, guys, on the 4 hour or the daily time frame, it doesn't really matter. It's the fib extension, okay? The Fibonacci retracement, a very, very powerful tool. And let's have a look when this bull market started, okay? So if we have a look when this bull market started, we could zoom in real quick, okay? So we're gonna zoom in like this. Sorry, guys, we're gonna zoom in, and let's assume that this bull market started right here, okay? So as you guys can see right here, we could use these Fibonacci retracement as resistance line or support. Okay, so we saw a nice little bounce right here off the fib, off the 3.82, and we came back up. Okay, now we could have seen another bounce right here, of course. Okay, we could have been like, oh, I'm gonna take a long right here because this is a 3.82 level, but you know, this is a time where you also have to put a stop loss right here at at 44,000. Another thing is you could have taken a short once it breaks out. You could have been like, oh, I'm gonna take it to the next level, the 0.5 level. That's going to be my take profit 1. Then my take profit 2 would essentially be right here, my 6.18 level. Now the 6.18 level is a very, very important rule. They call it the golden ratio. It's a very, very important level in mathematics. So very, very interesting one too. Anyways, as you guys can see right here, we saw a nice little beautiful, beautiful bounce off the 618 the 618 level, which is the golden rule, golden ratio, whatever you guys want to call it. And we saw essentially 2 big bounces. So you could even taken a short right here and then back down to the 6.18 and then even longed from that area. So at the end of the day, guys, you have to really learn and sit down and study, because nothing is gonna come easy. If you guys are willing to do it, of course, anything is possible. But the reason why 90% of traders lose is not because they, essentially because they give up. It's not because they're bad traders and they don't know how to trade. It's because 90% give up and they don't give it another try. And honestly, I lost a lot of money before trading and before starting to be like successful essentially and start being profitable. I lost a lot of money, and most traders nowadays, they lose money, and it's essentially tuition. You're gonna have to, in order for you to learn, you're gonna have to pay. That's just how it is. It's like this in college. It's like this everywhere. So that's all I have to say for today's video, guys. Of course, if you guys like this video, please leave a like, comment, and subscribe. And I will see you guys tomorrow. Peace.